Um, good morning, everybody, and welcome to this panel, where we will be looking at ways in which infrastructure projects in Africa could actually attract private institutional investors' capital. So we have a very distinguished panel here. What I propose is that I'm going to ask a question to. I'm not close to I should be closer to the mic. Yeah, I'm going to ask questions to the panelists, first round of questions, and in answering the questions, the panelists may actually also tell us what they do. And after the first round of questions, we go to the audience for additional questions to the panelists. So first, couple of words about myself. As Barbara mentioned, I'm the global head for IFC Infra Ventures. This is the project development business of the World Bank Group, which is housed within IFC. And we develop infrastructure projects across the world with two regions of focus, Sub-Saharan Africa and Asia. In Sub-Saharan Africa, we have a number of projects which are under development, including some projects that have already achieved financial close, and in fact, one of our projects is already delivering power to the population of Senegal because it achieved commercial operations. But we have a number of projects still under development. I'd like to go to the audience if there are questions. I know John has to leave at 12:30. Maybe I will pose a follow-up question to John while I'm soliciting questions from the audience. John, what I wanted to ask you, if you may, maybe talk about some success stories that you may have seen in terms of seeing projects that have managed to attract institutional investors' money, so that you can actually give to Alexander and also Sylvester a sense of what kind of project that institutional investors have actually financed before. I suppose, I don't know if you have of your mind a couple of examples that you can share with us.
One of my panelist members here said one of the things that we need to get right is legal certainty as well as policy certainty. Now, if you pick that example and you look at the success of the South African Renewable Energy Program, where the South African government was in a position to define the rules of how the private sector can participate in investing in the renewable energy program, and now it's almost in round 4 of such a program, is that they have managed to attract 120 billion of private sector capital to invest in the renewable energy program in South Africa. And that's mainly because the rules of the game are much clearer and the investors are prepared to participate in the program. What we've also seen is that the de-risking of the project, where the government, at the back of it, provide a guarantee. What we find is that most investors are saying, well, if I invest in a renewable energy program in South Africa, for example, what type of risk am I really taking? Yes, you've got a middleman in between, which is Eskom, the single buyer office, but in reality, you're taking technology risk as well as sovereign risk in those projects. And what we've seen is that the market has started to price it quite well going forward. And then, yes, obviously, it's, the world of infrastructure is not always perfect. You make certain assumptions when you make an investment. And in my previous role, I've had an opportunity to participate in a Pan-African fund that invested in an airport in Tunisia. So even there, one had an example of where you get a report from your advisors that says this is political risk, this is that, and then the actual assumptions, as the lady has said on my right, they don't play out the way you had assumed. And I always say to people that you need to accept that there's risk everywhere. I mean, if you look at Europe, for example, you had government defaulting on increase and so on. So why are they being treated differently when it compared to African investment opportunities? So there are good stories mostly, and there are examples where you could get things wrong, but you need to learn from those mistakes.
Okay, thank you, John. Look, I thought there was a question in. Oh, Barbara has a question. There was also a question on that side of the room, but I don't. Okay, sir, I can see you over there. Please.
Sure. I'm Matthew McDevitt. I'm from Delberg Global Development Advisors. We're a strategy consulting firm that works in emerging markets. John, I know you have to go in 5 minutes, so this is largely directed at you, but I'll make it quick. Along the same sorts of themes surrounding kind of the success factors of these sorts of projects, when we're looking at pension funds in South Africa, you mentioned that not many of them have actually managed to invest that 5% kind of limit that they're allowed to. But which examples have we seen of those that have? And where they have been able to invest 5% or close to, what do you think is driving that? What are the success factors really, either internally or kind of just surrounding their particular decisions?
Okay, I'm going to take Barbara's question as well, so we can take all questions together because we really have to wrap up also.
Okay, my question is for Sandra. Okay, I used to work for Moody's, so I've been inside the belly of the beast. Okay, you brought up a really critical issue: currency risk. And here we have this enormous challenge of building the physical background, the backbone of Africa. So if we're going to search the history of how deals have been, cross-border deals have successfully mitigated currency risk. And for example, rating agencies have provided, through the monolines, offshore receivables that have been successfully rated AAA, taking 100% RAP, okay, because you've had offshore lockboxes. So you could have, that's easy comparatively, right? So you could have contracts, offtake agreements with corporate clients using the railroad that are going to export them and have a match. What I'm having a hard time wrapping my brain around is the local currency, foreign currency mismatch, of course. There's only, to my knowledge, there's only been one instrument that has pierced the sovereign rating, and that was in 2001, the foreign exchange liquidity facility that OPIC put forward for an AES Tietes transaction. It has never been replicated, and we're exploring how to bring that to bear here. But do you have any solutions for us on this or ideas of where we turn? Thank you.
Yeah,
on the currency risk.
That's quite technical question, but I mean, I like the question. Actually, I'd like to engage you on that as well. So what I'm going to suggest is that John and Sandra, you answer the questions, but let's give some time also to all the other panelists to wrap up and share a few comments in wrapping up the session. Yeah. John, you start, please.
Okay. No, thank you. The question has been to say that, funds that have invested the full 5%, what was the driving force? What I could say is that it's mainly driven by progressive boards. So you find that most pension funds that have, trustees that are curious, attend conferences like this, they often question their own investment consultants to say, you've been coming to present to us investment opportunities, but you haven't told us enough about the continent, and everyone is talking about the continent. So, often I've seen that being driven from the top. I must be honest, if you look at the asset consultants who are often classified as gatekeepers, I don't think some have been as strong as they ought to have been in doing more research on the continent. And I think this example came yesterday. The Africa Investor hosted a dinner yesterday with the Eskom Pension Fund, and the CEO of Eskom Pension Fund gave his own story of how they've started to invest on the continent, and he said that they decided to go elsewhere to get advice on how to approach the continent, and he deployed his own team into the continent to do more research for him, to advise the board on the Africa strategy for the fund. So that the challenge then that stands is that not many pension funds have the capacity to push ideas down to their own advisors and ask their advisors to investigate further, and the question is then, are those funds, continuously going to miss out on these opportunities? The other challenge that we face, which I didn't mention in my remarks, is the actual structure of pension funds. It's predominantly a defined contribution structure. Of course, you've got a few funds that are defined benefit, and obviously that presents a challenge, because in a defined contribution structure and in a slowing economy where you've got members being retrenched and leaving the fund, you need to be in a position to liquidate the investment and give them the money back. Because often people don't preserve their retirement savings, they take them as cash because they're trying to survive in between jobs. So that's one of the major challenges, especially in the context of South Africa, where a pension fund of 10 billion rands is saying, well, if I want to put 5% of the fund to these long-term projects, what happens if I need to redeem the market? And I think that's where one of the opportunities could be to create a secondaries market where people can sell their sell their commitments in a secondary market, so that you deal with that liquidity issue.
Okay.
Yeah.
Thank you very much, Sandra. You want to?
My analytical colleagues would be better placed to answer your question precisely, but I'll give you the benefit of what we have seen. Utilities and transport companies, as I said before, are earning money domestically, and there have been mechanisms put into those transactions. But like all things that are helping to either remove risk or to enhance a project, or that means to get the rating up, comes at a cost to the project. And whether ultimately either the developers or the local government, if it's involved, or the central government is willing to give up that cost, there can be that kind of mechanism. We've also seen deals, though they haven't completed, where banks have tried to put in some sort of facility, whether it's a domestic bank, in some cases been an international bank, where they've tried to route the cash flow through a special fund that they have. How much they're actually charging to the project, I wouldn't be best placed to answer, but we've seen that kind of situation. I mean, by and large, all projects generally will not break sovereign ceilings, especially the domestic projects. It's in the commodities that you see projects actually breaking sovereign ceilings. Sometimes that can be from the PPA that they have, the length of the PPA. We've seen in the oil and gas sector, and Egypt was a perfect example, where they kept the cash flow from the from the gas, beg your pardon. They kept it offshore for 3 years before they brought it back into the country, and that's how they got their projects done, almost like a future flow transaction. There aren't very many mechanisms, but they come at a cost to the project.
Okay, thank you very much. I could add, actually, at IFC, we've done a couple of transactions. I don't remember the name, Barbara, I could come back to you, in Latin America, where through the B-loan umbrella, we've been able to pierce the sovereign ceilings, because essentially B-loan will give you preferential access to foreign exchange. And it's rare, but it has been done before, and it comes at a cost. But most of the transactions that have pierced the sovereign ceiling are future revenues. When you have export revenues, of course, that's a bit easier to do. But even with domestic revenues, if you have a local currency on a national scale, which is high enough, and then you put the bill on umbrella over it, sometimes you're able to pierce the sovereign ceiling. So now let me get the wrap up, actually, starting with you. Please.
Just quickly on a theme that came up briefly on this, on the point John made about scale in the institutions. I'm going to use a South African example. We recently did a transaction where we were syndicating part of a loan we had done to potential institutions. And I remember in that case what they did, actually, they called us and they said, no, we don't use you as advisors, but you're going to come and tell us, because we're going to ask them the same questions that your credit process asked. and we want to test as to how you came to the answer you came to in financing those projects. And effectively what they were doing was they were insourcing our knowledge and skill on that sector which they didn't have internally, and using our own metrics to try and close a gap that they have on their side. Obviously they would use one or two other advisors, but effectively they effectively insourced us in the process. In fact, one of them was so comfortable they took a bigger number than they thought in the beginning. And secondly, paradoxically in South Africa you find the same people are actually invested in utilities listed assets, let's say this South African National Roads Agency Limited. And maybe because of the work that maybe Sandra and them do, they find it easier to deal with the institution than to deal with a specific project. And probably the big effort in South Africa is to get those institutions to be more capable at dealing with a project in the same way that the banks are able to do. And my last point around the currency one, but it's going to be focusing more on the issue of the gas to power one, maybe not on the revenue related side when you've got an oil and gas project, is that if you look at South Africa, and this question is arising a lot in the South African context, is that if you think about it now, the consumer actually pays for a dollar denominated asset, but they never pay in dollars, they pay in rands. Every time they go to a fuel station, there's a mechanism and a formula that deals with that. Now the big one around the energy and electricity side is that, okay, you can't, the South African energy market, you can't change your prices of electricity every day. There's probably an annual determination or a medium-term determination. It's more about how you structure a transaction in such a way that the investor is comfortable that the gas price that comes in, even though there's a currency mismatch, the consumer at the end of the day will pay for that, and how the sovereign allows a mechanism that allows for that translation with a regular review by a regulator, so to speak. And that's the generic approach that's likely to be used to deal with that currency mismatch from the gas to power side.
Thank you very much, Kwesi. Let me move to Alexander. Sylvester, Alexander over there. Sylvester, please, why don't you give us your closing remarks, please?
Thank you very much. And just to give a quick closing remarks, as we are all aware, the Lapsset Corridor project is aimed at creating a land bridge across the African continent. One of the key features of the African continent is the lack of accessibility, particularly in the central parts of the continent. And by creating this accessibility, we are therefore increasing the market size. And just to look at what the Lapsset Corridor project is doing, even just within Kenya alone, it is opening up about 200% more investment space, considering that the existing corridor basically opened up just about 30% of the country's land space. So we are actually unveiling more than double just within the country alone. And then now you look at within the region, linking with Ethiopia, South Sudan, and the rest of the region, we are actually integrating a population land space of about 300 million plus. And if you are to measure this in the world that perhaps most of you have known best, the US, the EU, among others, then you are actually looking at a bigger opportunity in Africa, just around the Lapsset Corridor. Therefore, to look specifically, we are unveiling with the infrastructure that I did explain about. We have about 30,000 hectares of land in Lamu for a special economic zone, for which the infrastructure that we are building will therefore allow manufacturers, among many other investors from different parts of the globe, to take advantage of this infrastructure. The Lamu port is therefore also unveiled for private sector, for operations. The oil terminal, the coal terminal, also for private sector. Crude oil pipeline. The wind power projects that have a lot of opportunities for private sector to invest, particularly in Marsabit, Lamu, and Turkana areas. We also have power transmission that you do know quite well, and we are also looking forward to having private sector to participate in power transmission now that we have a lot of power generation projects. We also have logistical terminals or logistical hubs within the corridor from Lamu, Garissa, Isiolo, Moyale. And when I talk about Moyale and Nakodok or Nadapal, I'm talking about the border with Ethiopia and the border with South Sudan. We are talking about a product pipeline that has therefore come to be of great interest now that we have opened up the link with Ethiopia. We have the agricultural value chain, about 10 value chains being unveiled through a detailed study that has shown us what is possible within the entire corridor. We have tourism potentials, and with over 10 national parks and national reserves with very unique flora and fauna. All this, together with Mount Kenya within the vicinity and Lake Turkana, among many other areas. We also have quite a robust catalog of service sector that can actually be invested into by private sector. So what we've done is that by opening up this new 200% more space, we are actually recreating, re-energizing, and reinventing the investment space in Kenya, in East Africa, and in Africa. Thank you.
Oh, thank you very much, Sylvester. Again, very passionate. Look, I think what you're doing really is it's a huge infrastructure development program, which is quite impressive. And I think we have to acknowledge that the private sector is not going to be financing all these projects. There is a role for the public sector to finance some of the projects which are actually creating the enabling environment for the private sector to come in and do the project that the private sector does best. So in all the projects that you've listed, some of projects will be more suited for private sector participation than others, but all of those projects are very necessary to create that market. And so
I spend 1 minute just to explain that point.
Please.
Yes, we've also taken a strategic approach as a country so that we create the platform for private sector. We've created 3 different streams. One, the stream in which the government is taking the lead to clear areas which might not make a lot of sense to private sector with regard to returns. But they are quite critical in facilitating private sector investment. For example, at Lamu Port, we wouldn't ask our private sector to go and dredge the channel and to make the port a deep sea port by creating that channel. But we have sunk money as a government so that any other private sector investors that want to invest now in the port berths that we are going to make available, therefore we would find enough reason and enough facilitation.
Fantastic, thank you.
Secondly,
very much. Please,
we have also made sure that we have done the basic project preparation frameworks so that private sector does not have to come and start from the scratch, but you already find data among many other facilitative mechanisms, even cross-border mechanisms. Thank you. I'll stop there.
Fantastic. I'm sure you can speak for a lot more time because you're so passionate about this, which is fine. So, Alexander, why don't you, you have only 30 seconds really to finish, if you may, give us a closing remarks.
Yeah, I'll try. I think
Sandra, okay, Sandra, you can have 30 seconds. The organizer will kill me, but Sandra, please go ahead, and then Alexander will finish. Sandra? Yeah, please.
Apologies. Where do I get interest from institutional investors and from banks who are advising in Africa? It is about solar. We do a lot of renewables work from the Spanish developers, and a lot of the Spanish developers are also refinancing their renewable projects in Iberia. Some of them are also providers of turbines to renewable programs. The South African renewable program, I've been talking to some of the bankers now for about 4 years. And again, some of the people from the first round are wanting to look at having their projects rated to see whether they could change the structures on their bids on future rounds. Refinancing of oil and gas pipelines in Central Africa. We did some indication work in West Africa. In fact, we privately rated a couple of mines in West Africa, but they were owned by private equity, hence they were kept confidential. In East Africa, there have been interest regarding the rail, but nothing really committed to a indication rating is where we do a lot of our work. So it's really renewables, which is where people will progress further to full ratings in Africa.
Thank you. Fantastic, Sandra. Alexander, please.
Thank you very much, Alain. I really want to just close with one comment on the legal and policy certainty, and also look forward towards your new work at Africa 50 by giving that example of the pipeline. I think to an investor, both domestic and international, you cannot have a situation where we have 2 competing east-west pipelines in Kenya. We also have now, he's developing a port in Lamu, and Tanzania in Bagamoyo has an $11 billion port being done by the Chinese. So they're competing, 2 competing ports. How can you allow that? And if, say, invest in the Lamu port, and I know Bagamoyo is another $11 billion port, that policy uncertainty is not good. You must really just have the regional governments agreeing, we will share infrastructure, we will compete on services among ourselves, but we'll share infrastructure. The other thing that really alarmed me was this thing of Dakar that USAID presented earlier, where you're almost reaching the finishing line to financial close. Then the central government says, sorry, you cannot raise debt as a city of Dakar. We also have the same uncertainty where our 47 counties want to raise debt, want to issue all these nice instruments to finance very localized infrastructure. And central government is saying you need my approval, maybe you don't. It's very uncertain.
Yeah.
So you really must nail down the legal environment and get it to be certain, and governments do not compete.
All right.
Is that what called coopetition? Cooperating and competing at the same time. Yeah. They should really work together. Thanks.
Thank you, Alexander. Thank you. But I think we need to wrap up. Sorry, because the organizers are looking at me with stern eyes and saying. So thank you very much. Let's give a round of applause to the panel because they did a very good job.
Doing business in Africa. You can't afford to be without Africa Investor.